myself Vaibhav. In today's session of Visual JForex, we are going to take a look on the interesting indicator named standard deviation. This is the statistical indicator actually, and this is part of the oscillator series in which we have seen some interesting indicators so far. And today we will see the standard deviation and how we can utilize this indicator to develop the automated trading algorithms using the Visual JForex platform. So here it is. Amongst all these oscillator indicators, we don't have the description, so we straight away head to the Visual JForex platform developed by Dukascopy Bank SA. It makes life easier for us as we can design the automated setups which will be trading on our behalf while we are away from the system, and all the instructions will be executed just the way we want it too, and all we have to do is design the good enough system. And to that extent, these indicator blocks are going to be of great help for us. To initialize the setup, you can use any of these start point. All three are equally valid. It depends on your requirement. We have already gone through the specifications of each start point, and once if you want to kind of recap, you will have to go back to the prior sessions videos which are there in the playlist. Now for today's session, this is the indicator standard deviation. I have included its formula, how it is calculated. Basically you have to take the SMA period for the n number of periods. So here you have to define the time period, how many candlesticks period you want to take into account, then the calculation of the SMA, and then you subtract the SMA value for that particular time, particular candlestick from the closing price of that candlestick, and then you take the sum of that and no, first you have to square the difference and then take the sum of it and then divide by the number of period, and then finally you have to take the square root of that. So that's how it is done for us. This calculation will be done by the system, so we don't have to be bothered much about calculating these standard deviation day in day out. For us the job is a lot easier. We have to see how we can define these input parameters depending on which we will have the output value, and then we can use this output value to define conditions for execution of the trade. Certain parameters should be met before the trade gets executed, so we can define those conditions using these output values. To define these input parameters, we have to define 5 input parameters. We have to see it on the chart how the standard deviation indicator works, and what is the likely setup which is going to bring us the positive returns, where we will have the higher probability of ending in profit rather than in loss. So let's head to the chart on the JForex platform. This is the Euro USD chart on the hourly time frame. Here I have added the standard deviation indicator. I think I had changed the value. Let me restore the default values here. The default value is usually 5 for the time period, and the deviation has been kept at 1. So here, as you can observe, we see that whenever the underlying instrument moves sharply after a long period of consolidation, we see this standard deviation value shooting up. That's basically because we are taking into consideration the average price, and then whenever compared to the prior average value, if the last candle's closing price shoots up and it is kind of increasing the difference between the prior values and the last candlestick's closing value, then you will see that standard deviation rises, and then using any indicator which will guide us for determining the trend, or you can even rely on the price action, you can then think about going in for the fresh trading positioning. So here, and after the top has been reached, after either the move has happened either on the upside or on the downside, again when the consolidation begins and when the trading range narrows, we again see that the standard deviation values goes down, and then we again see these shooting up when the price action returns, when the momentum returns. So you can say that this indicator basically gives you an idea as soon as the sharp move in the price happens, and to that extent, this is a this is the indicator where you don't see much of a lag between the price action and its reflection in the standard deviation value, and that's why it is one of the favored tools when it comes to giving us the pulse of the market in a time bound manner. And if we look at the trading setups which are possible using this standard deviation, then you have to keep in mind that this is direction neutral. We don't really get to know the direction of the momentum unless we look at the closing values of these candlesticks and compare them to the prior closing values. So you can say that whenever the momentum rises, it can be on the upside, it can be on the bullish side or on the bearish side. The standard deviation simply shows up the magnitude, and also this difference, there is no kind of, you can say that a defined difference. Basically it depends on the instrument, and for every instrument the standard deviation will be different, and you have to take into consideration the historical values and then see how and when this change is happening and compare it accordingly. So you have to kind of observe on this chart and then come to a conclusion of what is the appropriate level of standard deviation which you think should be there before you go in for the fresh trade. And to that extent, I think even if we do a cursory observation, you can see that whenever we see that standard deviation is shooting up at least like more than 0.01% or 0.1% of the ATR range, then we can say that there is a shift in the momentum and the momentum is now on the rise. So it depends on what is the appropriate level, and you will have to go back in time and see, and then after due observation you can determine the necessary level, and then you can determine the parameters for your trading setup. So let us go back to the Visual JForex board here, and for today's purpose, for today's session, we will basically use the default instrument as it is, the Euro USD, so we don't make any changes here. Coming to the time period, the time period of candle depends on your trading horizon. If you want to trade on the smaller time horizon, I think the time frames like even 1 minute, 5 minutes, or 10 minutes are good enough. If you want to trade on a longer time horizon but not too long, then 30 minutes hourly are appropriate. And if you want to trade on a much longer time horizon, then the time period like 4 hourly or daily would be more appropriate. So that's how it goes and that's how it works, and all these parameters are up to us to be defined, and we have to see appropriately which is more likely to provide us the profitable setup. For that, basically it's the question of doing the trial and error. You come to a conclusion after you run enough of testing and you see what is the structure, what is the setup which is likely to grow profitable in the shorter term or in the medium term, or for that matter from the point of view of longer term. Now we change this parameter to 15 minutes each. The candlestick is going to be of 15 minutes each. Here the shift is actually look back period. So when the shift is at 0, you are taking into consideration the current candle's closing value. If the shift is 1, 2, 3, or so on, you are going back in time to by that extent, and taking into account the output value for that particular candlestick. The time period is the number of candlesticks which are going to be taken into consideration for calculation of the SMA. which will then be used to calculate the standard deviation. So more the candlesticks in calculation, more smoothing there will be and more uniformity also. And we will do a bit of experimentation on that count. Let us try to change this value and see what kind of difference we observe. When I make it 10, you can see the plotting has changed to some extent. If I make it 100, again the plotting has changed to a larger extent, and it has changed quite dramatically. If I reduce it to say 50, the standard deviation chart, the standard deviation plotting is a lot different. For example, if I change it to 20, it is something like this. So depending on the time period, the number of candlesticks which will be considered for calculation, you will see the volatility values changing as the closing values for those times are taken into consideration. The deviation, actually we are taking the one standard deviation here, and we can choose to change the predefined coefficient also, and all we have to do is see how much we want, and it doesn't make much of a difference, and mostly it is kept at 1. For example, you can even try with 3, so not much of a difference there. On the plotting also you can see, so we will leave it as it was, the default value of 1. Then comes the output value, which is the all important output of our standard deviation block. After we have defined this input parameter, based on the input parameters we will be getting the output value, which then can be put into any logical block if we want to use it for further setup for defining the conditions. All we have to do is take this output value and place it in this variable slot, and then compare it to another variable and see if it serves our purpose or not. So that's how this output value can be used. And also we can change the applied price for the candlestick. Now we are taking into consideration the difference between the closing price and the SMA. If you want to change that, you can always do that. You can change different these listings. We have these high price, low price, median price, typical price. So all these are possible, and we can use those parameters also. So for example, if we choose a different price to take the difference between the SMA and, for example, say high price, we will see that to some extent there is a difference between the standard deviation output values, low price, median price. It's not large, but to some extent there it is. So that's how this indicator works, and I hope you will be able to develop the profitable setup using this standard deviation indicator. If you have any query or any idea, you can always write back to me in the comment section. That's it for the day. We will be back tomorrow with a new indicator. Till then, have a fabulous time. Goodbye. Thank you.